This video covers Mitsubishi Corporation's financial results for the first quarter of fiscal year 2025, covering the period from April to June 2025. Mitsubishi Corporation is Japan's largest general trading company, or Sogo Shosha. It is part of the Mitsubishi Group and operates globally, engaging in a wide range of businesses, including investments across various industries and supply chain management. Mitsubishi is one of the big three trading companies in Japan, known as Sandai Shosha, along with Itochu Corporation and Mitsui & Co. Executive Summary. In the first quarter, fiscal year 2025, Mitsubishi Corporation recorded underlying operating cash flow of 250.4 billion yen and consolidated net income of 203.1 billion yen. This represented progress rates of 28% and 29% toward the full-year targets of 900 billion yen and 700 billion yen, respectively. The figures were generally in line with expectations, although performance varied across segments due to the timing of dividend income. Earnings benefited from capital recycling gains and several one-time items. Strategically, Mitsubishi made progress under its corporate strategy 2027. Under the Enhance initiative, it shipped the first cargo from LNG Canada and expanded salmon farming operations through Termac. Under Reshape, it completed a tender offer to fully acquire Mitsubishi Shokuhin. Under Create, it announced plans to increase its stake in Thai Union Group, aiming to strengthen its position in the global seafood business, and entered a renewable fuel joint venture in the U.S. to support decarbonization. Summary results for fiscal year 2025 first quarter. Mitsubishi Corporation's financial performance is generally on track with its full-year guidance. Underlying operating cash flow was 250.4 billion yen, achieving 28% of the full-year forecast of 900 billion yen. Consolidated net income was 203.1 billion yen, reaching 29% of the full-year target of 700 billion yen. These results reflect solid progress, although both figures declined year-on-year due to timing differences in dividend income and the absence of large gains recorded in the previous fiscal year. Mitsubishi is also steadily advancing its 1 trillion yen share buyback program, having repurchased 347.3 billion yen worth of shares as of June 30th, 2025. Summary results by segment. Consolidated net income in fiscal year 2025 first quarter showed a significant year-on-year decline across most segments. Environmental energy income declined by 33% because of reduced dividend income and the absence of a depreciation adjustment that had benefited the previous year. Materials Solution and Mobility also posted declines due to market challenges and foreign exchange losses, respectively. Mineral Resources segment saw the largest drop, with income falling by 85% due to the absence of the prior year's gain on the sale of coal mines and lower market prices. Urban Development and Infrastructure showed a large increase, driven by gains from project completions and real estate sales. Food Industry segment decreased due to the absence of prior year tax and sale gains, despite a one-time gain from the sale of TH Foods. Smart Life Creation and Power Solution posted income gains, with Smart Life Creation benefiting from tax adjustments related to dividends, while Power Solution saw stronger earnings in its overseas energy business. The other category showed a decline due to unallocated expenses and inter-segment eliminations. Overall, consolidated net income dropped to 203.1 billion yen in first quarter fiscal year 2025. Similar to other trading companies, lower market coal prices resulted in a large decline in profit. Shareholder return policy. Mitsubishi Corporation's corporate strategy. 2027 emphasizes a balanced approach between growth investment and returning value to shareholders. The company continues to follow a progressive dividend policy, raising its annual dividend per share from 100 yen to 110 yen in fiscal year 2025. Although there is no fixed target for the total payout ratio Under the new strategy, the 3-year average from fiscal year 2025 to fiscal year 2027 is expected to exceed previous 40% target set under the Midterm Corporate Strategy 2024. In addition to dividends, Mitsubishi aims to return capital through flexible share buybacks. For fiscal year 2025, a share buyback program with an upper limit of 1 trillion yen has already been announced. Stock price. This is the Japanese yen base chart for the last 1 year. The Japanese yen stock price is 2,986 yen as of August 4th, and the US dollar stock price is $20.15 as of August 1st. There was no significant fluctuation in the stock price following the earnings announcement, as the results were in line with consensus expectations. Current PBR is 1.28 and PER is 16.2. Dividend yield is 3.68%. Compared to the last few years, PBR and PER indicate that the current price is relatively high. However, as dividend payments have continued to increase, the dividend yield is now higher than before. Conclusion. Mitsubishi Corporation's fiscal year 2025 first quarter results show steady progress toward full-year targets. While overall earnings declined year-on-year due to one-off gains in the previous period and weaker market conditions, particularly in the resources segment, Mitsubishi is advancing its growth strategy under Corporate Strategy 2027. It continues to prioritize shareholder returns through increased dividends and a large-scale share buyback program. Although profits declined, progress was in line with the full-year forecast, making it a good overall result.